Trade recap. Today I took a win on a paper trading account since I have to get my confidence back. And today is also the third candle of a daily fair value gap creation. So I am not allowed to take live trades in these conditions. But I decided I wanted to try to get my confidence back with the paper trading account. So I took a paper trade and it was a win. And let me go over it. So we had this weekly fair value gap here right here as a target, a kind of a clear target since we are sweeping that previous week low. And on the daily time frame, well, yesterday during FOMC we had this huge move higher. So today the target was kind of obvious, which was this weekly fair value gap or this daily liquidity pool. But what could we how could we have targeted that? This is also quite interesting, which I noticed in hindsight actually, but confirmed it now as well. We saw this happen 2 times today, where this 4-hour fair value gap initially, when I got into or got to my trading desk, I wanted to see us trade into this 4-hour fair value gap to continue higher, but we did not do that. And that is, of course, seen by this wick. Yes, we know that already. But why is this wick so strong compared to other wicks? Where, let me see if I can find an example. Let me see real quick. I'm not sure. Anyways, inside of this 4-hour candle wick, we can see that, and I'm going to show you 2 examples of this today that happened just during London and in between London and New York session. But here, okay, let's see. This candle was created from 9 p.m. to 1 a.m. That 4-hour window was this 4-hour candle, the third candle of this breakaway gap. And during that time, we can see that here at 10:30 p.m. we had the first 15-minute fair value gaps. Notice it's 2 time frames below. So we had the first 15-minute fair value gap higher. We came down, we respected it, and we created another 15-minute fair value gap following through on this one. So we now have the re as well. So we have confirmed order flow continuing higher even if we are in the third candle creation of this 4-hour fair value gap. And here we can see that we came down and we swept the low that respected this first fair value gap to then and then created a second fair value gap higher. We swept that, which is also known as the last line of defense. Swept that to then continue higher. And here the exact same thing happens. And this was where I took the trade, not realizing that it was the exact same thing that happened during that time, but it was. So we were actually also in the third candle creation of a hourly fair value gap, and that was between 4 a.m. and 5 a.m. So let's see here on the 5-minute time frame actually, or this is a 15-minute fair value gap which we stung into. You can see here at 4:20 a.m. So we stung into that during the hourly candle creation. And on the 5-minute here, we can see that we had the first fair value gap higher in between 4 and 5 a.m. And we then, this already shows signs of that we might want to leave the hourly fair value gap that is about to be created as a breakaway gap. But it is confirmed after we come into that fair value gap again 2 time frames below to then create a new fair value gap following through on the first one. These both fair value gaps were created within the hour that the third candle of the hourly fair value gap was created. So it happened within that hour. We can see here again that we came down exactly when the hourly fair value gap was created. We came down because of uncertainty, and we move this to the side, and we swept the last line of defense again. We swept this second price action leg on the 5 minutes to then continue higher and take out the target. But my trade here was when we stung into this 15-minute fair value gap. Let me actually remove some lines here. When we stung into this 15-minute fair value gap, this was also very early into the third candle of the hourly fair value gap. So it was still 40 minutes left until the hourly fair value gap was about to be created. So when we stung into this and we had the perfect textbook sharp turn here, the fair value gap in, tapping it beautifully to then displacing aggressively higher, I entered on that, got filled at this point, and my first target was 80% off here. So remember, this was on a paper trading account, so this was just to gain some confidence back. First target was this high, 80% off, stop loss break even at this point. Then when we had the second run higher and we're very close to the draw, I put my stop loss at this low, which ended up getting tagged out then to the draw. It doesn't really matter. I learned a valuable insight from it, so I'll take that for sure, and I'll keep that in the back of my head. I've also written it down, and I'm gonna drill it into my head a little bit more. But this was the trade at least. So unfortunately, not the full take profit, but got stopped here after the first take profit was hit. That was the trade, at least. Tomorrow we have NFP, so we will see if we want to continue lower already today. But that was the trade recap.